I've been trading for 6 years now. The first few years, honestly, I didn't journal at all. I constantly swept expenses under the rug, and truthfully, I just kind of hoped everything would magically improve. Spoiler alert, that did not happen, and I ended up wasting 2 to 3 years. Of wasting my time, I ended up then I started half assing it, logging entries and exits and calling it a day. Neither of those really worked. It wasn't until I started journaling the right stuff that things actually started clicking for me. What your journal should actually track. So, if your journal is just entries and exits, maybe a one sentence note, I need you to hear this. That is not journaling, that is bookkeeping. It's not going to help you improve long term. I spent years doing that, logging trades, looking at my numbers, and still making the same mistakes over and over and over again. It wasn't until I started tracking both the executional and the psychological data that I started to improve, such as your mental state, the cost of these mistakes, the patterns in your specific behavior, which rules you broke. They're all very, very important and unfortunately get overlooked a lot. The 3 pillars of effective journaling. Effective journaling has 3 parts in my opinion, and most traders only do one of them or none at all. I'm looking at you, degenerate YOLO traders. Pre-trade. How are you showing up? Before you ever open a chart, what's your mental state? Are you well rested? Are you focused? Are you stressed? Pillar number 2. During the trade, did you actually follow your process and your rules? Not just what happened on the chart, but what happened in your head. And pillar number 3, honestly the most important of all 3 of them in my opinion, what can you learn from this? This is where the real breakthroughs happen, and it's the part that people skip unfortunately. The reviewing, the reflecting, the finding the patterns. Before we go deeper down the rabbit hole, let's talk about why most traders quit journaling, because I quit too multiple times throughout the years. It feels like homework after a long trading day. You're already mentally drained, and now you have to fill out a journal. Yeesh. Nobody wants to do that, let's be honest. Second, they only track results. The entry, the exit, the P&L, done. Not much insight is gained there. You're just recording what happened that day, but not truly analyzing why everything happened. Third, no accountability, no feedback loop. You're just logging into the void and leaving at that. You're not really reviewing anything, which leads me to the 4th point, which is reviewing. They just don't review. They log if they log, and they just forget and don't actually ever come back to that data, and it truthfully just defeats the purpose. This is probably the most important slide in this entire video. The review process matters more than the actual logging. So logging is step 1. Most traders stop there and wonder why nothing changes, right? But the magic happens when you sit down once a week and you actually look through your trades and look through your data, and you start seeing patterns, the same mistakes at the same time of the day with the same emotional state, same rules you keep breaking over and over again. And once you see that in the data, it's very, very hard to ignore that. So for example, look at this sample weekly review. 14 total trades, 11 of them were rules followed, 3 of them rule violations. It cost $412. Right? So that alone is really helpful to actually just say, oh, on paper you're like, oh, well, I only broke 3 rules, but actually seeing the cost of the rule breaks is very, very important. Common mistakes: over trading, best day Tuesday, worst day Friday. So that's the kind of insight that's very helpful to know when you're actually reviewing your data. So breaking down the pillars further, for pre-trade, it's all about checking in with yourself before the trade. So for example, sleep. If you slept under 6 hours, your brain literally cannot process risk the same way. This is scientifically proven. I used to trade tired all of the time and didn't think it mattered. Then I started tracking it and realized most of my worst days were days I slept like complete and utter dog shit. Next would be low energy. Low energy means reactive trading. You chase instead of waiting for your setup. Next up is stress. External stress bleeds into your decisions whether you realize it or not. Did you have a fight with someone recently? Did you have a subpar day at work yesterday? Are you having money issues lately? That type of stuff follows you to your trading desk and really impacts your emotional decisions. For mood, are you anxious? Are you angry? Are you overconfident? Each one of these moods creates a completely different trader. And last up is rule checks. So read your rules before you open a chart, not after you break them. That one sounds super obvious, but let's be honest. How often do you actually review your rules? Do you do it on a daily basis? Do you not do it at all? A pro tip, out of sight and out of mind is a real thing. If you don't have your rules that you can physically see them, whether it be on a notepad, on a piece of paper, on your desktop, wherever the heck it is, as long as if you cannot see them, it's going to be really hard. So what I do, I keep my rules on my desktop screensaver and my home screen, so I'm forced to see them every single day. Pillar number 2, deep dive. During the trade, what the heck is going on? How are your emotions? What were you actually feeling? Are you feeling anxious, confident, FOMO? Write it down in the moment, not after. You will probably forget an hour or 2 or 3 hours later. Just write it down in the moment. Rules. Did you follow your entry rules, your stop, your position size? Yes or no? Be specific. Execution. Did you move your stop? Did you add to a losing trade? Did you chase an entry? These are all things that cost you money and they need to be tracked properly. For focus, were you actually locked in, or were you just checking your phone on social media mid-trade and just looking at memes? Distracted trading is expensive. And last but not least is your trade score. So rate your execution 1 to 10. Be honest with yourself. This is completely separate from the actual outcome of the trade, whether it's a win or a loss. A 10 out of 10 trade can still make money. A 10 out of 10 trade can still lose money. That is fine. But a 3 out of 10 trade executional wise that made money, that is a problem. Just because you won this time doesn't mean you will win the next time with those subpar habits. So very important to realize. For the last pillar, what did you learn? Flag your trades. Which ones are really, really worth studying? Which ones need work? Go through them weekly in a focused review session, not just scrolling past them in a list. Oh yeah, this is fine, this is fine. No, take the time and actually review them. Patterns. Same mistakes on the same day. The same emotional state leading to the same outcome. This is super important. Track that. Costs. What do your rule breaks actually cost you? Like I talked about before. This isn't in theory anymore. This is in actual dollars. You know the number. When you see your rule violations cost you, say, $800 last month, this hits a lot different than, I broke 4 rules. No, now it's directly correlating, hey, I lost almost $1,000 last month because I'm trading like crap and I'm not following my rules. Improve. Ask yourself honestly, would you truthfully take this trade again regardless of the outcome, win or loss? If the answer is no, congrats, you learned something. And last is just iterate. Refine your rules based on data, not feelings. So 2 pro tips. Pro tip number 1 is your strategy will evolve and you will constantly change your strategy and tweak it throughout the years. Your day 1 strategy will be probably completely different than your year 2 and your year 5 strategy. You're going to be constantly improving and tweaking. And another really cool pro tip is when you review and when you're journaling, always give yourself a kudos. Even if the trade went completely horrible, there's still something that has to be pretty decent and okay that you did. It really helps the positive reinforcement when it comes to the journaling process, because if you're constantly negative when you're journaling, there's a very, very high chance you'll probably just stop, which kind of goes back to the other slide about quitting and journaling. Just give yourself a kudos. It doesn't have to be fantastic. Just, hey, I followed one rule out of my five. It doesn't have to be huge, just some sort of compliment. Alrighty, enough slides. Let me show you what this actually looks like in practice. I'm going to walk you through a full trading day journaled, how I do it with psychology and executional data. Every morning before I trade, I fill out my pre-market checklist. It takes about 2 or so minutes, and it really helps me. It has market context, risk management, mental state, my trading rules, my game plan, my overall bias for today. And something else I thought was pretty neat is it kind of gives me a weather report depending on if I check things or not. It changes the weather report in real time. So I thought that was pretty neat. So then if we go into the actual trade itself, next on my trading journal routine is adding a trade. Personally, I enjoy doing this manually opposed to CSV files or automatic imports or anything like that, simply because it helps me reflect easier and be more mindful of the actual journaling process. So you have your typical trade basics, your entries and your exits and everything like that. And this is where people usually will stop here, just the confluences, your entries and exits. But when it gets really important is actually tracking your sleep and your energy and your moods, your mistakes, your emotions, that trading score that I talked about earlier, and did I follow my actual rules. And also reviews, exit reasons, screenshots, and everything like that. And giving you an example of a trade that was a mistake. So in this case, you fill out all your basics, your entry and exit, everything like that. And a lot of journalism don't really talk about accountability or holding you accountable. So in this case, I didn't really fill much out for this specific trade example. My energy was low, my sleep was crap, everything like that. I didn't follow my rules. So the system will call you out on that with the accountability module. And it really helps kind of put things in perspective, and it also goes into dollar costs like we talked about before in the slides, and that all gets spit into the reports in your analytics tab. So you don't just see this, like you actually see the data behind that elsewhere on the platform. And then going to the review section, so you can either study this or it needs work. In this case, since this is a mistake example, I would say, okay, well, this needs work clearly, but just so, because if I'm not going to review this right now, maybe in a couple days, it'll be helpful to have a refresher. Be like, okay, this is very low sleep, and just, did not follow rules at all type of thing, right? So then it would be sent to the review tab where you are able to see something like this going forward when you review a couple days later. And in this case, you're able to do a full in-depth review section. So if you see, nothing else shows. Like this way, you're able to see only this, and it helps focus. So you can mark, since this is the example, there's nothing really here. But if you have an actual review, right, you can have your trades, your notes, everything like that, mark as complete. And then you could also have your history and your insights spit back at you. So it's very, very helpful for the accountability and the reflection process. And that's it. That's what journaling the right way actually looks like. Focusing on both the executional and the psychological data, right? And being accountable and reflecting on the data, not just logging it and say, oh yeah, I'll review, but then don't ever look at the data ever again. So I really hope this helps. I plan on making a lot more videos over the next couple of weeks. And if you enjoy this type of content, feel free to subscribe. And thank you so much. And I hope you enjoy the rest of your day.